All right. It's great to have you here again. Here are our esteemed panelists this morning. And so we're going to have the panel discussion is on how to secure your business future, talking about comprehensive approaches to financial stability and funding opportunities. And so my esteemed panelists this morning, it's wonderful to have you. This morning we'll be considering multiple aspects of your organization's financial situation, talking about risk, the risk elements, risk inherent in the businesses you run, in terms of how to secure partnerships, talking about financial stability. A lot of us have gotten the feedback about how do we ensure that we have ample capital to run our businesses, particularly in the long term. So what types of approaches, what types of funding should we be looking at? And a lot of people talk about funding and financing. They're different things, right? So I'm sure today our panelists will be doing justice to that. In the face of evolving economic challenges, businesses are increasingly faced with a lot of gaps in the resources that they have access to. Panelists today will be addressing a lot of these issues. So I'm going to give that opportunity to each one of our panelists. I know you understand who they are, their titles, and so on, but it just might be helpful if they talk a little about what they do, who they represent, and the types of solutions they might have available. So starting with Karen, just over there, if you could do like a 1 minute, 2 minute introduction, and then we'll pass it on across. Thank you.
Perfect. Thank you very much. It's such a pleasure being here. I'm Karen Greve Young. I'm CEO of Futurpreneur. I'll shout him out later, but I want to shout him out now. Adeline, will you wave? Is on our team. He's a business development manager on our Black Entrepreneur Startup Program. Futurpreneur has been around for nearly 30 years, and we're an organization, a nonprofit that helps entrepreneurs start. You heard on the last panel about the importance not only of money, but also of mentorship. And that's our model. We have mentorship and loan financing for entrepreneurs at the beginning of their business journey. It's up to $75,000 in partnership with the BDC. And for our Black Entrepreneur Startup Program, shout out partnership with RBC, who makes that program possible. That $75,000 comes alongside one-to-one mentorship for 2 years. And we also, you heard from the minister about side hustles. They're real. We have $25,000 for entrepreneurs doing side hustle businesses, which do, in fact, particularly attract women. So I think when I think about what we do, and you heard about the potential tension of inclusion and productivity and prosperity, I see them being completely inextricably linked. And the programs we have are all about inclusive economic prosperity by having more accessible financing developed by, driven by, led by people with lived experience to make these programs successful. I could talk about this all day. I'm going to go on to my fellow panelists.
Thank you, Karen. Yeah, let's have you, Jonah. Thank you.
Hi, everyone. My name is Jonah Chininga, co-founder and CEO of Woveo. So we are a venture-backed financial technology company based in Calgary, focused on community financing. One of the reasons why we started the business was the high cost of borrowing in underserved communities. So we wanted to be able to provide an alternative that would be a sustainable solution that was also a grassroots system that could enable people to participate in our economy. I'm happy to share more as we continue to the conversation, but thank you.
Thank you, Jonah. Thank you. Right, so we'll have Odoi, Yemoh, Professor.
Yes. Hello, hi. Thanks for having me. It's always a pleasure to be here at Casa Foundation and also as Friends of Africa Coalition now. My name is Odoi Yemoh. I'm currently the president of the Ghanaian Canadian Chamber of Commerce, and I also run an accounting firm here in the GTA called Reality Capital Management, where we deal with accounting, bookkeeping, taxation, consulting, and training. I also teach at Humber College, where I'm a professor of financial mathematics. I'm here to, answer a few questions and share my thoughts. Thank you for having me.
Thank you very much, Prof. And so we'll have Latanya, who is from TD Bank. Please go on.
Okay, hello everyone. So I'm happy to be here as well. TD Bank has been a proud partner with Casa Foundation over the years. In my work at the bank, I support what is called our diverse segments pillar at TD, where we look at communities that are normally marginalized and are not supported with the access to resources. In particular, I work for the Black customer experience segment, and under that portfolio, we focus on the customer experience, the colleague experience, and the community experience. And part of communities being a part of or supporting Casa Foundation that has good programming, accelerator, and incubator solutions for entrepreneurs who want to make life in Canada, and TD has solutions for those kinds of clients. Thank you.
Thank you so much, Latanya. Thank you. So I'm sure you agree with me. I speak your minds when I say we have all the resources we need on this panel today. So please prepare your questions because we're going to be taking them. All right. So in the last 3 months, Casa Foundation has completed various training programs, masterclass sessions, mentorship, and so on for over 750 entrepreneurs. All right. And the recurring questions continue to be, how do I get funding? And so we ask them, you want funding? You need financing? What exactly? How do I get grants? Oh, I prefer to start with grants. Are you running a business or is it a non-profit? And so on. And say, oh, why should I take a grant? Why should I take a loan when grants are available? Why do I need that? Isn't it better for me to take a grant? I don't have costs I'm incurring, and so on. Those are the types of questions we'll be answering today. So let's talk about traditional financing. And, we'll get to talk about grants later, but we focus on traditional financing. Starting with you, Latanya, we know the traditional role of money deposit banks. Everybody does. What are the other products available to groups of small businesses that are in the room today when you talk about traditional options, alternatives, and how can they maximize the opportunity that a bank like TD would avail?
So that's pretty interesting. Very good question. Within the banking sector, as we know, access to credit is a traditional form of cash flow support for most businesses. Within TD itself, we support our entrepreneurs through the Canadian Small Business Financing Program. And at our bank, we call it the Canada Small Business Financing Loan. And this supports a client or business who at any stage. So it could be when they're starting, which is germination stage, or as they continue to expand the business. Outside of that, we encourage clients to use other people's money. What we mean by that is not all of us, and it was said or suggested in the previous panel, not everyone has access to family members who can support or provide that capital injection. So when we think about what you need in terms of support, we might look at credit solutions like a credit card or a line of credit that can help you with the recurring expenses in the business and help to give you a buffer between revenues and expenditure. So those are some of the solutions at the bank.
All right, thank you, Latanya. And coming to you, Prof, why a lot of the people, now Professor Odoi, because he teaches financial mathematics and budgeting and cash flow management and so on at Humber, he's actually one of the lecturers at our sessions. And so because of this, he's aware of some of the questions. And I do recall you saying to a few founders in the room, and I'm sure a lot of people can learn from that today, that not everybody needs a loan at their current stage of development. Now, how can you speak to that when you listen to Latanya? When is the right time to take a loan? When is the right time to access some credits and so on, based on the knowledge she's shared? Can you speak to that? Thank you.
Well, thank you very much. That's a very good question. Actually, finance, as you all know, is very important for every business. If you're a startup or even looking for funding for expansion and all that. But, the question is, when you look at the non-traditional way of funding, it has grown significantly. According to the Grove and Mill recent report, that space is supposed to be growing probably double by 2028. Actually, currently there is somewhere around 1.5 trillion. It's expected to grow to about 3 trillion by the year 2028, which tells you that that space is growing significantly. Why? The question is that the traditional way of funding has been very difficult for people to assess that. For instance, if you're a new entrepreneur, you're new to the business, it's going to be very hard for you to assess those. So right off the back, I can just give you some few non-traditional ways that as a business you need to look at and to get funding. One of the fastest way nowadays is through BDC, what we call the equipment loan. BDC will quickly fund you through accessing up to $100,000 by accessing an equipment loan from them. But bear in mind that there are so many other funding, non-traditional ways that are out there. Nowadays, we're looking at crowdfunding. We're looking at peer-to-peer funding. You can actually go online and look for, online for individuals who are willing to give money to new startups. We also have venture capital, angel investors. Actually, all those funding are out there. Strategic partnership is where the world is going currently. And so you can partner, you have the fund, another person has an idea, you guys can partner and then jump into it. So, but there are pros and cons, by the way. There are pros and cons as to which type of funding you need. So like Dr. Olu said from the beginning, not every business you just go and get and jump into getting a loan. You need to actually look at the pros and cons. For instance, if you are going into peer-to-peer funding, is it a space that you want to look at? That is why we always encourage people to start from friends and family to start the business, especially for a startup, so that you don't end up dealing with interest and all those things. And so the best approach is to contact a financial advisor to take you through the steps. Reach out to groups like the Black Advisory Hub, who advise you as to where to go when it comes to that. But I can tell you right now that the non-traditional space is growing significantly, like I said, and that's the space that you actually need to take a hard look at, and you get access to so much funding that is out there. Thank you.
All right, thank you, Professor. I'm going to come to you, Jonah. Can you speak to that also, the non-traditional alternatives and the role of Woveo in actually fast-tracking that?
Yeah, so I think I just wanted to be able to tag along to what you mentioned. Actually, from my experience, the most successful small businesses that I've seen, they were actually started by either community financing or friends and family. And the reason being is when you're starting a business, as a business owner, it's really important to understand the relationship between capital and risk, right? If you're understanding that it's going to take time for your business to be able to make money, is your business viable? Is it profitable? And whenever you engage into other financing mechanisms that are going to have an obligation to be able to pay that back with the high interest fees, it's going to make it very difficult. So for us at Woveo, even how we started the company, we started leveraging the company using community financing, the SUSU model. That's kind of like how we actually started financing the business that we did. So the journey was, we started like the first product that we built was using community financing. A group of us came together, we put money together, and we financed the business until we got to the next stage. The next stage of the business was now when we're at a stage whereby we could qualify for National Research Council, because now we're building a product that could have a national impact just in terms of the technology that we wanted to be able to build. And then after that, now we're able to go into venture capital, into other debt facilities, because we had the capacity, whether it's to service that 18% APR, we had that capacity to do that. So I think it's really important to be strategic, especially early stage, to be able to increase your odds of success by understanding that what type of capital am I taking into the business, and if you have the option to be able to leverage community or friends and family, always highly encourage it to be able to build a viable business.
Thank you, Jonah. Thank you. I'm coming to you now, Karen. Can you speak to the role of Futurpreneur in bridging the gap between the traditional and non-traditional alternatives, and the role of Futurpreneur? Thank you.
Yeah, I will. This is such a rich conversation, and I think, the best money is money that you don't have to give up part of your company for, and that you don't necessarily have to pay back with interest. So if you have friends and family and networks, that's awesome. That's great. I think where we come in is for entrepreneurs where that's not a reality, and when they have a service or product business where they will be making revenues, so that they will, if they take on debt, they have a realistic line of sight to being able to repay that at affordable interest rates and with interest only in the first year. And so I think when you think about financing your business, there's so many resources out there, it can be very confusing. There are different resources in terms of what you might qualify for. And the way to think about it is, for instance, when it comes to borrowing, often certain communities, Black communities, Indigenous communities, in particular newcomer communities, struggle to access affordable loans from financial institutions. The great thing is that the financial institutions have acknowledged that and are working to change that. In fact, Futurpreneur exists because 2 financial institutions started us realizing that they don't support startup entrepreneurs, particularly younger people who don't have equity to borrow against. And so that's the gap we fill. So it's a non-collateralized loan, meaning you don't have to put up anything to borrow, and it is a fixed term over 5 years. And the rate is prime plus 3%, capped at 9%. If you can get a home equity line, that's probably higher than you can borrow against otherwise, but we're for people who can't. And so so I think that there are other organizations as well. We all partner together. We fund alongside FACE, we fund alongside Community Futures organizations. It's finding the organization that is right for you. One quick note though, if you have a really R&D intensive business where you are a long ways from revenues, but once those revenues come, they'll come quickly, then you probably want to look at equity, and we haven't talked about that, it might come up later, but I think that that's a different way of funding your business beyond debt to consider.
Wonderful. Thank you so much, Karen. I was also going to piggyback on what you just said. I know that from a lot of questions we get in class, and we're still going to throw that open, a lot of people want to understand when it comes to the age range, the range.
Yeah, I know.
Yeah, 18 to 39.
Yeah.
18 to 39. They would come to us with questions like, what if I have a board and with people, entrepreneurs, 18 to 39 on it, but then I'm also there, I'm 50-something, I'm 60-something.
Absolutely
so
fine.
How does that work?
The majority owner, so for Futurpreneur, the majority ownership has to be held by those who are 18 to 39, who are the majority borrowers. They're the ones actually borrowing, but the business can also have older owners. And likewise, I should note, for our Black Entrepreneur Startup Program, which is an even better tailored version of our core program, it's 25% Black ownership, self-identified for that program.
Amazing, amazing. So you just heard that from the horse's mouth? If I could, that's a CEO of Futurpreneur.
Again, Adela is sitting right over there.
Okay. So I'm sure during the networking session you'll reach out to him also. But this is really important to all of us in the room for you to get to know. And I'll be coming to you shortly for a few questions. Now, coming back to you, Latanya, how do you... when you talk about startups, generally SMEs and so on, the feedback we also get, because it's our role to collect some of the feedback and bring that to you on the panel like this, is that usually the deposit money banks don't just like startups. That's just a general, that's just a general thing, the way it's said, but that you don't fund startups. I beg to differ a bit. I think you do, but let's hear it from you now.
All right, so I think that is normally this consensus based on just opinion, but it's also, as my colleague here said, you need to actually talk to a financial advisor, because the banks are shifting in terms of what they're recognizing as trends in especially Canada and the entrepreneurial space. We look at the Black community in particular. Statistics show that a Black Canadian is more likely to start business than general population. And then the other part of it that we are recognizing, especially through our Black customer experience, is that statistically Black applicants for credit usually are not approved. So within TD Bank, we've created what is called the Black Entrepreneur Credit Access Program. It takes a unique look at the individual and their business. And if you're a startup, we ask that you provide us with certain things. So if you believe in the business, a business plan is essential. Business plans give the opportunity for you to forecast revenues. We're trusting that based on the market research and the strength of that business plan, that we can find a solution to support a brand new business. But again, it takes a conversation. And of course, you understand in the business and you understand in the industry that you want to play in. And then it translates for us and makes sense for us to fund.
Absolutely, absolutely. Thank you so much for sharing. Now we go to you again, Professor. Based on the gems of wisdom just shared by Latanya, let's talk about risk management. A major part of, some of the reasons would be why perhaps a few of the founders in the room have been declined loans from time to time. It's because there are perhaps risk elements in those applications that they never thought to mitigate or find a way to mitigate, and so they keep getting declined. So talking about risk management, and now with all the unpredictability around us, how do you suggest, how do you recommend, or what are your recommendations to founders in the room, to SMEs in the room, on how they can address some of the risk elements? There's some mitigants that are just not acceptable. Although they claim they've mitigated some of those risks, but they are not acceptable to the financier. So how do you suggest that people manage or navigate such issues?
Well, thanks, Dr. Oli, once again. Risk is essential when it comes to borrowing, as we all know, because the lender or the investor is expected to get their money back over a certain period of time. And so depending on the market that you are in, so there are different types of risk. If you study risk management, they will tell you that risk cannot be fully eliminated, but can be reduced. So what happens is that in risk, either you are reducing, you can adapt or transfer that risk. And so I can tell you right now that there are different types of risks that you as a business person need to assess before you actually venture into it. For example, credit risk. You are in a business where you're not able to collect payments from your customers and things like that. That will affect your bottom line. Market risk, for example, all of us here know about Blockbuster. They were in the market. They were the biggest, place that you can go to rent a movie, a cassette or a movie to watch. Now, with the influx of Netflix and all that, they're out of business. And so if you're in the business, it all comes down to your business plan as you are led to, because you need to do thorough research to understand the risk aspect of things. Now, when we look at the accessibility of funding for even startups or even the black community in general, it's been very difficult for us because credit risk has been an issue. A lot of the time, credit issues are not being taught in schools. Therefore, by the time you graduate from school to start your business, you already have credit issues. Your credit is not good. Therefore, when you submit applications, they turn down on you. So what you need to do is to work on those kind of things before actually venturing into the business, because once you are in the business, you're going to be needing funds. And so making sure and ensuring that your credit is solid is one of the things. But like I mentioned before, you can also mitigate the credit, the risk by transferring the risk. That's why you can get insurance. You can actually have an emergency fund that you can rely on. You can also, talk to people within the same space and see. You can even join the Black Advisory Hub, where we have incubators. We can lead you to getting funding in other means. We teach you how to actually come up with a comprehensive business plan that can help you alleviate some of these risks. So risk will always be there, but you need to actually learn to mitigate that risk. That's all I have to say.
Thank you so much. And I'll take that to you again, Jonah. How do you manage that, even in the business you run at Woveo? What are the things that they have in place to mitigate risk?
Yeah, no, I think risk is a big proponent. Just in terms of, first of all, I think from an entrepreneurial perspective, risk tells you which kind of capital you have to approach. So for us, for example, we knew that we are building a business whereby getting to profitability is what's going to take time. We're building a product which is very capital intensive, just because the human resources and the talent and the expertise that we need is going to be very expensive, right? You need like highly technical people. You need people with background in regulations and compliance. So you're dealing with really kind of like high capital and cost structures. So we knew that based on that risk profile, the highest risk that we could go for in terms of capital was probably venture capital. So understanding that, I think it really helps in terms of building a sustainable business, as well as not putting pressure on yourself as a business owner. Because one thing that you want to make sure is when starting a business is high risk, but you don't want to end up putting yourself in debt if that business fails. So right, you want to be able to have calculated risk. But I think secondly, for me, when I look at the capital infrastructure, I have a personal opinion and belief that the bank the banking system, especially like the big banks, were not built for small businesses. If you look at it from a historically, if you look at it from a Canadian perspective, the community banking ecosystem was the one built for small businesses. I went to school in PEI. I still remember having the first conversation with the superintendent of financial services in Prince Edward Island, telling us how the first credit union in PEI was built by the Atlantic fishermen. These fishermen couldn't get access to credit from the big banks, and then they came together and established their own community bank to be able to create a borrowing facility between the fishermen, the farmers, and be able to achieve that. If you look at it historically, looking at Desjardins in Quebec, it was the same thing. When the French community came to Canada, the business owners didn't have access to capital. They built the infrastructure around their community banking. So I'm a strong proponent and a strong believer in like the community banking infrastructure is the right partner in terms of like enabling businesses to be able to succeed, because it's a relationship-based credit risk model.
Absolutely. And I agree with you from the entrepreneurship perspective too. Karen, can you wrap that up for us?
Oh, wow.
What do you say?
I'll do my best. I'm going to think about it in sort of 3 different segments, sort of when you're thinking about starting and planning, and then when you're in the business and when things go well and things go badly. First, when you're planning, and are there newcomers in the room, kind of relatively new Canadian entrepreneurs? No? I'm kind of surprised. Anyway, we're at the Friends of Africa Summit. We have a lot of African Canadian entrepreneurs in our community. We just launched a new initiative called My Canadian Startup. TD, through the TD Ready commitment, is the sponsor of this amazing program, and that's about being prepared. What do you need to know about the business landscape you're playing in? So I think that's the first thing, is being prepared broadly. And then there's being prepared specifically, coming up with your business plan, your cash flow that anticipates what your market will look like, where you'll get revenues. If you don't have aligned to revenues, it's a hobby. Where the revenues will come from, what the costs look like, with some sensitivities, because it won't usually go the way that you plan it. So that planning up front is really important, and a lot of people, including us, have tools for that. And then you're in the business, and things don't go as you expect. I mean, you're an entrepreneur. Things don't go quite as you expect them to go. And sometimes in a challenging way. And in that case, it's important that you have partners and funders who will help. We have a whole client support team dedicated to when an entrepreneur is having trouble repaying their loan, helping them restructure, helping them think. So go into your partnerships and your funder relationships with people who will help you when times are hard. Sometimes times are too good. It can be risky to not be able to fulfill. I don't know if you know the company One More Cocoa, Kanisha's amazing chocolate company. She was the only Canadian business on Oprah's wish list last year. And all of a sudden, she went from thinking she knew what her holiday was going to look like to what her holiday was going to look like, and needing to source differently and needing to get different product and inventory in. And that can also be a risk. So really thinking about both sides and how to fund the good, how to fund the bad is imperative, and that's where the mentor, the advisors, the programs come in.
Absolutely, absolutely, and I do agree with that. Thank you so much. Thank you so much for the gems shared. Now we're coming to you. We do have 2 questions that we can take, and we're going to take those 2 questions. I do have one already here, and so you indicate if you have a question. I'm going to read this and see who can take this. It's just straightforward. Why should I make a budget when there's not even enough? How do I manage my expenses, allocate very scarce resources effectively, even though I'm already my own bookkeeper and social media manager? Okay, now I think this person, it's like he's kind of managing everything, and he's saying, is a budget even necessary when there's not enough, to spend? Who wants to take that and speak to that? We could have 2 or 3 of you. Yeah.
I think I'll take that quickly, because it's budgeting and finance, so I'd like to take that.
All right.
Actually, there's a saying that if you fail to plan, that means you are still planning to fail. So for you not to have a budget and running a business is risk in itself. You need to have a budget to conform to that budget. Even in your own personal finances, if you don't plan, you tend to spend, you get swayed somewhere else. So budgeting is the key. The fact that you are budgeting helps you to forecast properly, to be able to allocate expenses effectively, and therefore be able to, look at your profitability. And even if you want to grow the business, it gives you a direction. So budgeting and planning is essential to every successful business. So that's what I like to say.
All right. Okay. Yeah, Jonah, please.
Yeah, no, I can just add quickly. I think there are two things that I think of from an entrepreneur perspective. One, on the greed side, so how do you budget when you don't have? I think there's an element of greed, and as an entrepreneur, just having high tolerance of pain, where sometimes probably you have to cut down on your lifestyle, you have to do things which are hard at the beginning to be able to make that work. It's just part of the journey. But then strategically, I think one of the things that really worked for us was earlier on we invested in a fractional CFO, right? It's something that you can pay like $300 for someone just to be able to look at the business financial model that you have. What are the margins? What are these things? So that expertise can actually help you to be able to understand, okay, I can be able to now go into this part-time, or I can be able to go into this full-time. I think investing in that earlier on will really help.
And my point would be just to have people understand that you need to know how the money is being spent. You actually have to have a track and a trace. It helps you in the end with your accounting and your reporting, and it helps with your accountant to tell the story of your business from a revenue and expenditure point of view. So the end of the year, when the CRA needs to visit you, you have a clear line of demarcation about what revenues came in, what you spent on, and what you deserve as a write-off. And that's basically it.
Thank you for those. Do we have any other questions? I think there's one here. All right. Please go ahead.
Thank you to our panel. I would like to ask a question to all of you. So my first question is about peer-to-peer savings circle. In the French community, we call it tontine. So do you think that will be a good solution to use the system to get money from our community, friends and family? And my next question is about accessing loan or even funding as an entrepreneur, as a startup. It's often difficult for people that are starting the business to go to banks or even to organizations like Futurpreneur and directly get this kind of money. So how can we make this more accessible to people, to entrepreneurs starting at the bottom? Because sometimes conditions, there are many barriers. And yeah, that would be all.
Yeah, I think. Yeah, do you want to go? I think Karen would take one, and then you
want to
can
start? Do you want to do the first one first, or?
Yeah, it's okay.
So to the second one, yes, I'd say everyone who wants to get a loan isn't necessarily able to get a loan, and it isn't the right model for everybody. I do think that, to be honest, the challenge in funding entrepreneurs, and particularly newcomer entrepreneurs and entrepreneurs facing systemic barriers to credit, is why we have our tailored programs, and they have a very different credit requirement than other funders. So, and our advisors will work with entrepreneurs to understand their needs and understand their credit and their plans. So, I'd encourage you to have the conversation to get started. To see whether that's possible. But I do think that there's a recognition that we've really messed up in not providing credit to everyone who has an amazing business idea, and there are a lot of us working to rectify that.
Thank you. Yeah, Jonah, please.
Yeah, no, I can just add on the saving circle. First of all, thank you for that question. That's my favorite question. So I think, like, with regards to saving circle, for us, we've seen that has been a very successful mechanism in community in terms of like leveraging business owners. So for context, on the Woveo platform, we have about over 400 communities who are using like the Susu group savings as a way to create credit lines for themselves. The biggest advantage is, one, it's interest-free, so you're able to actually use that money from your community group to be able to bridge that gap. Secondly, we have a 98% repayment rate because of the accountability that exists between people that know each other. If you look at the traditional report that was released by Senator Deacon around the progress on black entrepreneurship, one of the factors that was mentioned was we have a 22% default rate in the traditional financing mechanism, which is the highest among other demographics. So if you're comparing those two mechanisms, you're actually seeing kind of like different financial behaviors by leveraging the systems. And then also third is one of the things, even for me personally, why I decided to start this company was in Canada, there are about 8 million people who are non-prime credit scores, typically people from underserved communities. Annually, these people are paying over $62 billion in interest fees, right? I know business owners within the community that are using Easy Financial to be able to service their business. So at the end of the day, these people are stuck in the debt trap, whereby they wanted to just be able to build a business. So for us, that's kind of like why we started and why we believe that community savings, which is something that has existed for centuries, could be modernized and provide an alternative solution to that.
Thank you, Jonah. I'm going to skip Prof and come to you, Latanya. Any closing thoughts on all that you have talked about today?
So my closing thought would be that all things can work together. So there's a space at the table for everyone. I know that the banking system seems to be the one that's more archaic and a harder ship to turn with regards to accommodation for especially new entrepreneurs. But at the same time, we have to acknowledge that things are changing and the banks are recognizing too that this is also a very good space to support, and not only through the credit opportunities or services that we have, but we're also partnering with other founder groups, organizations that are elevating the information around financial literacy, empowering the community to take advantage of what's out there and to make wise decisions around what fits your unique business solution. So in that vein, I'm just gonna say, think of all of us. Even if you use everyone, you're still gonna be anchored to a bank in the end, so don't really cut us out.
Amazing. Thank you so much, Latanya. Thank you. Now, this has really been a wonderful session, and I'm sure I speak the minds of everyone here when I say that we've really been enlightened. We've gained more insights on who to go to, or if you want to do a combination of everyone, I'm sure you know exactly what to do with that. Now, ladies and gentlemen, we're going to wrap this up, but I'm going to say before we leave that Futurpreneur will still be around. Karen might be heading out, but we still have a couple of people from Futurpreneur in the hall. You need to connect with each one of them. Even if you think you're not ready, there just might be something in the offing, and this is the time to make the connection. You don't want to start running up and down when you now need the loans. They are here today. Make that connection. Make it happen now. TD is here. Jonah is here. They'll have a table out there, and so you can connect with them. We also work with them, and so for a few of you who might be at our programs, we actually are able to take your loans up to Futurpreneur as a partner of Futurpreneur. TD works with us directly. All the grants, all the seats are for people pitching today. So they'll be presenting their value proposition. And TD is actually the one funding that for us. So we work with all of these groups. And so make sure you take advantage of all of this. Tomorrow morning, early in the morning, 10 a.m. sharp. Professor is going to sit in that room. We have another breakout room. And we'll be talking about bankruptcy. That's because the most recent report from Statistics Canada indicates that a lot of businesses are now filing for bankruptcy. So we have them in thousands. This is really concerning. And so we'll be having a workshop at 10 a.m. The panel proper would start at 12, but I'm not going to allow him to wrap up because it's not wrapping up just yet. He'll be holding that workshop for all of you in the room. It's in the room next door, about an hour. Talking about bankruptcy as a CPA himself, what do you need to do and how you need to do that. So he's not going to wrap up today. Ladies and gentlemen, huge applause for my panel. We've come to the end of that. But I would say that you should take a picture of panelists before we head out, because I know a lot of them will be heading out. So if you permit, we'll just quickly take our own picture before the next group comes up. Yeah? Is that okay? Yeah.